Most January 31st, pain in a coaching practice is preventable for the price of 2 calendar entries and 1 folder kept clean during the year. The 1099 NEC deadline is one of the few tax obligations the IRS catches without needing to find you. The contractor reports the income, the IRS expects the matching form, and the gap surfaces in their system on its own. For a practice with 5 qualifying contractors, missing the deadline can generate $1,500 to $3,000 in penalties before the first IRS notice arrives. Build the deadline into the calendar. Build the prep block 2 weeks ahead of it. Everything downstream becomes mechanical. Same date for both halves of the obligation, and no grace period applies. January 31st is when you mail 1099 NECs to your contractors and when you file copies with the IRS. The IRS is more aggressive on 1099 NEC compliance than most coaches expect, partly because the matching is automated. Contractor income reported on their return triggers a system-level expectation of the matching 1099 on your end. There is no automatic extension, no soft landing at February 5th. Treat January 31st as a hard date, not a target. The universe of contractors who require a 1099 NEC is narrower than coaches usually assume, and reading the W-9 entity classification box tells you the answer mechanically. US-based individuals and unincorporated businesses, sole proprietors, single-member LLCs taxed as sole props, partnerships, paid $600 or more in the calendar year. That group gets the form. C corporations and S corporations are exempt. One exception worth knowing: attorney fees always require a 1099, regardless of entity type. Employees get W-2s, not 1099s, which is why the classification call from Unit 12.1 is the upstream gate for everything that happens in January. The $600 threshold is cumulative across the calendar year, which trips up coaches who think in single payment terms. $200 in April plus $400 in September equals threshold crossed, and the 1099 NEC issues for the full $800 when January arrives. The payment ledger has to be aggregated by contractor at year end, not read payment by payment in isolation. A contractor you paid 4 times across the year for small project work can quietly cross the threshold somewhere in the middle of the year, and the aggregation surfaces it during the January 15th prep block. The W-9 entity classification box does the heavy lifting on the exempt versus required call. If the W-9 shows S-corp or C-corp tax classification, no 1099 NEC is issued. File the W-9 in your records as documentation of the exemption position. If the W-9 shows individual sole prop LLC or partnership, the contractor is in the issuance pile if they cross the $600 threshold. The classification box answers the question without research, which is one more reason the W-9 lives at the front of the relationship rather than at the back. Many states require a state-level 1099 copy in addition to the federal filing, and the rules vary by state. Some states join the IRS combined federal-state filing program. You file once with the IRS, and the IRS distributes the data to the participating states. Other states require a separate filing through the state revenue department's own system. The variability makes this a CPA research item for your specific state, and the answer typically stays the same year over year once the CPA confirms it. Track 1099 and Tax 99 generally handle state filings as part of their workflow when the state participates in other path. IRS Section 6722 lays out a penalty schedule that is automatic and escalating, and reading it as a flat table makes the case for hitting January 31st cleanly. Filed correctly by January 31st, no penalty. Filed February 1st through March 30th, $60 per form. Filed March 31st through August 1st, $120 per form. Filed after August 1 or not filed at all, $310 per form. Intentional disregard, $630 per form, or 10% of the amount required to be reported. The schedule runs on its own from the moment the deadline passes. The IRS does not need to find you. The tool options for actually filing the 1099s sit in 3 buckets, and the cost is trivial compared to the penalty exposure. Dedicated filing services, Track 1099, Tax 1099, 1099, etc., typically run $3 to $5 per form and handle federal e-file plus most state filings. If you already have a payroll service from Module 19.5, 1099 filing is often included in the existing subscription. Your CPA handles it as part of year-end work if you have one engaged. Running the filing in spreadsheets and trying to e-file directly with the IRS is technically possible, but not advisable unless you have 1 or 2 contractors and you already know the IRS e-file system. A 3-contractor year through Track 1099 makes the operating sequence concrete. A VA paid $1,800 during the year. Individual on the W-9, 1099 NEC issued. A referral coach paid $750. Individual on the W-9, 1099 NEC issued. A graphic designer paid $1,200. S-corp on the W-9, no 1099 NEC. January 31st morning, log into Track 1099. Enter the amounts and SSNs from the W-9 file, e-file. The state filing piggybacks if your state participates. Done. The work takes under an hour when the prep is done. Put January 15th and January 31 on the calendar today, with the tool name attached, so the discipline does not depend on remembering. January 15 is the prep block. Pull the contractor payment ledger from your accounting system, match each contractor to the W-9 in your file, confirm the entity classification from the W-9 box, identify who crossed the $600 threshold, separate the issuance pile from the exempt pile. 2 weeks later, the actual filing is mechanical. The Section 6722 schedule is the motivating force. The 2 calendar entries are the actual mechanism. Cheap insurance against an automatic and escalating penalty stack.